I'm going to go through all the adjustments again because I think it's a bit long ago that we did this. So if I look at number 1, it says a debtor returns unsatisfactory goods with a selling price of 3,000 and cost of 2,000. So I said to you, whenever we have something like this, I know I have my sales will minus and my cost of sales will minus. My debtors control will minus and my trading stock will plus. It's the only one with a different sign. So when I go to sales, I'm going to subtract the sales price, and cost of sales, I'm going to subtract the cost price. I'm also going to draw T for trading stock because I need to remember that now I lost 2,000 rands worth of stock. I didn't lose it, but it was sold, so it's no longer there. And I also remember in my receivables that my receivables is now, oh no, I got stock back. Yes, I got stock back, sorry. And with my receivables, they owe me less. Right. Yeah, but remember, if I add debtor's allowance, it makes my sales less. No? The other way to write it would be minus 2,000 debtor's allowance plus the 3,000. So it makes my sales less. I just, by doing it this way, I already times in the minus. Is everybody sharp? Next one, stock taking. So now they give me trading stock. Now, when they give me stock taking, I go to inventory in my balance sheet and I immediately say 42 plus 120. And I leave it there because there might be an adjustment like in the test that says, oh, the owner returned goods or whatever after the stock take. Right. So now, let's go look. I see my trading stock has got an opening balance of 42,495, and now the stock take is 42,000. Now obviously I can see that the minus side is short. Okay, how much does the minus side short? Isn't it? Can't be 495. This is 44. So it's 2495. Okay, is that what she meant? Okay. So trading stock deficit, don't be lazy. Write out 42,495 plus 2 minus 42 gives me 2,495. Right. The moment there is a third thing in there. Okay. Next one. Stationery. So stationery, I have left 120, meaning I used 3,535. The fixed deposit matures. Now that's a sentence in its own right. Okay? The fixed deposit matures, right? So I know here fixed deposit is going to minus, ne? And cash equivalence is going to plus. So they say interest is capitalized, bring outstanding interest into account. So if it's reinvested, it means I first need to add the interest that is accrued and then I minus the total amount. Okay. Sharp. Yeah. So now let's go look. They tell me my interest on fixed deposit at this stage is what? 1450. So already I got 1450 in my bank, or in my fixed deposit in this case. Yes, sweetie? Okay, so basically all it means is if I have my fixed deposit, and my fixed deposit, let's say it's 100 Rand. If I have interest, and my interest is 10 Rand, right? If it was not reinvested, I would have said that goes to bank. So my bank will increase with 10. I take the money, I go buy a stock suite with it. If it is reinvested or capitalized, it means I'm not going to receive it now. I am going to put it with my fixed deposit. That is reinvest. I make it part of the investment. So, what they told me here is they told me I have a fixed deposit of 20 what? Where's my fixed deposit? I can't see it. It does not exist. 25,000, right? And I've got an interest on fixed deposit of 1450. This is my two balances. So because they say it's reinvested, and because I already got this balance here, it means that 1450 is included in that 25. Okay. But now they say there is still interest outstanding. So all you do is you say 25,000, and they say it's 10%. It means in the end, I need to put 2,500 here. You see, that's what I'm supposed to get. But obviously I didn't get that. I still short. And how much do I short? 1,050. So in other words, if I look here now, can you see I short 1,050? If it was not reinvested or capitalized, I would make this accrued income, a receivable. Because I haven't received it yet, so I can't put it in bank. But because they say I reinvested, it means they're never going to pay it to me now. They're going to, when it matures, it comes with the maturing amount. So meaning that will go to the fixed deposit. So when the fixed deposit now matures, how much will come into my bank? Both those amounts. Look in the cupboard if there isn't. You guys with me? So it means this you are shop with, and if I go to the balance sheet, I still need to add 1050. So they say the whole thing matures. So 26,050 is going to mature. And this is going to be 0. Can you see? You guys happy? You get it? Not on credit. I want you to get it now. Okay. So, let's go on. Next one. Next one is insurance. Okay, insurance, the next one. Insurance includes a premium of 2,400. Now I want to know the unknown over the known. And it was paid for the period 1st November till 31st October. You can see this is 12 months. Okay? Now you need to decide. are you going to count? If I look, what is my financial year? It is 28 February. Ne? So it starts 1st March. This thing goes 1st November till 31st October. Is that right?
Yes.
Okay, so now you can do it one of two ways. You paid 12 months. So whichever is easier. Listen. So now, if I look at this, I can either say, I count till the end of my year, till the end of the insurance year. March, April, May, June, July, August, September, October. 8 months. Or I count beginning their year, end my year. November, December, January, February. 4 months, meaning from the 12, 8 months is prepaid. Okay? Whichever one is easier for you. So now, I look. 8 over 12 gives me what? 1,600. So, I know this is a prepaid expense. So, it's going to make my insurance expense less. And it's going to go into my receivables. Next one. A new vehicle was purchased on the 1st of January and this was posted. So in other words, if I do note 3, which they didn't ask, did they? Oh, okay. If they ask note 3 for my vehicles, there's an addition of 24. And it is recorded, which means this 214 is the closing. So the 214 is the closing. How much was the opening? You have to subtract it. So it's at 190. 190. Less the accumulated 111100. So what's the carry value? Okay. Now when I calculate, I will calculate on the new and the old. And they say the method is the diminishing balance method. Is that right? So it means you're going to use that one. Okay? The depreciation. Yeah. What's wrong? Okay. So the new one, I'm just looking for a page. So the new one is going to be 24,000 times, what's the percentage? 20%. And how many months? I bought it when? January, so it's 2 months. So this gives me 800. The old one, I'm going to take the 78,900 because it's the diminishing balance method. And that gives me
157,800. 157,800.
No, it can't be 157,800. Yeah, it can be 157,880, not 800. Okay, now the total is that. If you didn't do note 3, the new one is easy. The old one, you will take the closing less the purchase, less the accumulated. and then you times with 20. Okay. Be sure that you can do it like that. That you don't have to go and do the note every time. Okay. Sharp. So my depreciation is 16,580. Right. What's my carry value now? Anybody? Hmm? You take the carry value. Plus, minus 350. Okay. Okay, the next one is equipment, and they just say equipment is 10% on cost, 20% on cost. But nothing happened to equipment except depreciation. So I just write it as it is. 48 is opening and closing. Accumulated is 14,400. So this gives me 33,600. No addition, no disposal. Depreciation is on cost. So 48,000 times 20% gives me 96. And what is my carry value then? 24,000. And my accumulated is going to be also 24,000. Now I need the depreciation. So the depreciation is what? 26,180. And that 26,180 goes to the income statement. Depreciation 26,180. What's my carry value? Oh, there's a land and buildings also. I every time forget about the land and buildings. Nothing happened to land and buildings, so the carry value is still the same. So how much does it add up to? $392,320. That will go to my balance sheet face. Oh, I have it. 392,320. Can you see? It's literally that one. Okay. Everybody up. Everybody sharp. Can you see your fixed tangible assets? Would literally be the land and buildings, and I'm talking to myself, né? Plus the vehicles, the start of the year, what was it? 190 less 100, the equipment less the accumulated, the addition, and the depreciation. I can just take the full one, eh?
Yeah.
And we'll give you that amount. Sure. So, fixed deposit is done, everything is done up to date. Before I start with salary and wages, let me quickly just see what we can finish. So, I can finish my sales. How much is the sales? Okay, what's the cost of sales? And the gross profit? Is that right? Income, the rent didn't change. The bad debts recovered didn't change. So I block and top, and it gives me 7, 14, 13, 11, 2. Is that right? So my gross operating is going to be 1, 2, 3, 4, like that. Okay, let's go to expenses. Expenses, I have wages, salary. Let's just wait. It's just salaries that's going to change. So leave salaries. What is my insurance? Property tax. Okay. My interest income, my interest expense didn't change. Happiness. Okay.